Hey guys, how's it going? Welcome to the session recap for the London session on Monday, the 4th of July 2022. So yeah, just ignore these annotations, it's just for the markups. I don't want to delete them because I have to keep rewriting them every day, as obviously the daily chart doesn't change that frequently. But yeah, we know we've been in this quite large bearish swing range on the daily chart for quite some time, coming off that extreme sort of monthly and weekly demand level, which gives us, some expectation that we're potentially going to see a much deeper pullback. But as we've been seeing for pretty much the last year or so, we've been selling off very aggressively. We've simply had that pullback to premium supply. We then sold off with a decent amount of momentum. We've had a bit of a bounce off this low. So even though it's a weak daily swing low and we expect price to break it and take it out, this low had a little bit more going for it than normal. Why is that? Well, it broke a decent bit of structure, right? You can clearly see that structure. In this case, we're referring to that as an internal pullback. It wasn't quite significant enough for it to be a swing pullback when you look at it relevant to the prior price action, right? We get this question a lot. If you're not using pip rules, how do you kind of determine what is swing or what is internal? And, I just zoom out a little bit and look at it compared to the other swings, right? That's a clear push down, nice, big and clear and obvious swing pullback. This for me then was why that basically viewed that as one swing leg. And for me, this was more of a 4-hour swing pullback than a daily pullback. Okay, so when we broke that bit of structure to the upside, that is a bullish signal. It's an internal break of structure on the daily chart, which is why this then became a strong daily internal low, right? Where we expect this movement. And there was the potential that we could get the continuation of that daily internal structure to come and mitigate higher premium supply levels, right? But then we'd look for the internal structure to switch bearish and then take out that low. So when you have conflicting biases between the internal structure and the swing structure, obviously we just have to do our best to deal with that and kind of be aware of both possibilities. But just remember the hierarchy of importance, right? Swing structure is always your strongest. Then it would be your large internal structure, right? Then maybe there's small internal structure within that. And then you get your fractal structure, which is what we look for chalk, right? And that would be your sort of most aggressive and insignificant structure. So yeah, I know that can be a bit confusing when you're first trying to wrap your head around the concepts initially, especially multi-time frame analysis, and then we bring in the internal stuff. But for some of you guys who've progressed through to the advanced technical analysis, this should make a lot of sense. But very simply, we've had a swing low, swing pullback, and we're expecting that movement to go. Also looking at the momentum, nice corrective pullback into that supply level, right? It's pretty likely we're building a lot of liquidity here to go to the downside. But if we look at the lower time frames, that can kind of help us a little bit more because we can wait for those to align itself with the daily chart to see what's going on. And unfortunately, again, structure's a little bit complex here on the 4-hour chart because although I have it mapped as bullish and that's the framework in which I'm sticking with, I still view this as the current 4-hour bullish range. I'm also using a little bit of nuance, a little bit of discretion, which is an advantage that humans can have, right, in trading over, let's say, algorithms. And I can also see that this is one quite big swing leg push down, and this simply could just be that swing pullback to now come down and want to take out that low, right? So I don't really have a high conviction either way here on the 4-hour chart. I'm kind of just more viewing it as, we have this kind of large daily internal range, and then we have this sort of range from within here, and we're coming off an extreme level of that range. So that can produce potentially a bit of a buying opportunity, but probably more focusing on this larger swing. That's as a corrective pullback. Then we have this leg down here, had a little pullback into supply, push down, and potentially we're just going to get something like that and sell off. So it's not super clear. I don't have a super high conviction either way at the moment. I'm kind of just looking for, or at least my bias for today was look for a quick long deeper into this level of supply. Well, then I'll be happy to look for shorts because they're pro M15 trend. Okay. And that's kind of how I'm viewing it from the 4-hour chart perspective at the moment. I don't really have a very clear sort of, medium-term outlook on the 4-hour chart other than my gut feel would say that we're probably going to sell off in line with the daily swing structure. So that's then when you can use the M15 as kind of what I really obviously use for my clearest intraday bias. If everything's confusing on the higher time frames, you can make a good argument either way. Keep it super simple and just follow the M15. And that's basically what I use for my intra session or my per session, whatever the phrase is, right? What direction do I really want to be trading in this session? And for me, the M15 is clearly bearish, right? That is, a clear swing break of structure. I think pretty much everyone would have your M15 swing structure mapped the exact same way. So what do we look for? After swing break of structure, we look for that swing pullback into premium supply, but then we can look for that next swing leg to the downside. However, if we look at the internal structure, we can clearly see that it is bullish, right? We've had this sustained bullish order flow. So how do we use the internal structure as a framework to help us? In the most simplest form, what we say is we have a bullish internal structure to facilitate that pullback, and it's only once we get that bearish IBOS, we get the bearish internal breaker structure, where the internal structure then aligns itself with the swing structure. That then is what gives us the confirmation that the swing pullback is now finished, right? And now we expect the internal structure to stay bearish. We expect those bearish ranges to hold, right? So we expect to see sustained bearish order flow until we take out the weak swing low. Right, that's the framework that we use. So whilst this internal structure is bullish, right, we can still look for longs. I mean, you don't have to. It's just depending on whether the confidence is here, how aggressive you want to be, blah blah blah. But the simple framework is we can expect that to potentially continue up higher. So in this instance, coming into London, where I think price was around here, what has happened before kind of Frankfurt and London kick off? Well, we've had that pullback above the EQ, right? The EQ is somewhere around here, so we're in premium supply. This grey box is the 4-hour supply, so that's another indication that we could be ready to now head to the downside. But because we hadn't hit the refined M15, which beats that candle, but we hadn't even hit kind of this pivot range here. We hadn't hit that either. We don't have to, but that's kind of one indication that potentially this high is going to get run. All we had from a bearish structure perspective is we had a bearish change of character on the M15 from that level, but because this was a lot of momentum as well, right? Strong momentum off that 4-hour strong low, because the 4-hour is bullish for me. We've come off that extreme demand with a decent amount of momentum. We have the internal structure as bullish, right? But it's also the nature in which price action is moving, because then throughout Asia we just correctively were coming down, and I was essentially looking for, okay, my gut feel is we're going to have another a decent potential for another bullish internal leg. We have this nice M15 demand zone here, this being the strong internal low. So I was just ignoring this candle here because that's bang on. See that 10 p.m. London time, which is essentially when the market opens for the week, and that's generally when liquidity is super low. So the spreads blow out just initially on that market open, and I typically often tend to ignore these candles, especially if you go and look at the M5, right? You can see that it's just the way the data is. It's a bit glitchy when it has that, for whatever reason, from the broker's data feed. So that was the true low I was looking at, if anyone was wondering why. So my main bias was to look for the long up into here, take very heavy profits at this level, if not full profits, and then start to look for shorts from within here to try and anticipate that next low, okay? But as always with internal structure, if we get a nice big internal leg up, look for the shorts from within here. But again, I'll be taking partials as we come down into this level, because this is still a strong internal low, and very easily price could then continue that overall larger bullish movement, right? Because it's only once we get that bearish internal breaker structure, like I was saying, that now it's aligned, now we have confirmation this swing pullback is now finished. And then if price was to come back in and you take the short, that's when I personally would be holding, or trying to hold as much volume as possible to now target the swing low, right? They're the two differences between this trade here and this trade here. This trade, it's pro-swing trend. It's from a very, high probable level. I mean, this would be the most ideal one, which I'll talk about in a minute. But I would still be taking decent partials here, because this is a strong internal low. Appreciate it's getting a bit messy. But once we get that bearish IBOS and then pull back in, if we can get that trade, that is the most highest probability, because everything is then aligned, right? And I'll be much more willing to hold a lot more volume trying to target that next swing run to the downside, okay? So if I could keep things as simple as possible, obviously there's a few conflicting biases on the higher time frames. M15 bearish swing structure. We have the bullish internal structure coming in. I was basically looking for a long up into here. Now, that said, before we jump down to the M1, I was also happy to take a quick short from within here, because obviously, like I said, we've pulled into 4-hour supply, we've pulled into the premium, it's pro M15 bearish trend. We don't have to mitigate any of these levels. We had that bearish change of character. We kind of had this really small internal structure here, and I was happy to look for a short in case that did lead to that move that led to that bearish breaker structure. And there was enough RR from this high to this low, right, in order to remove risk. So just looking for a very quick trade within here, because then price could come in here. I can then remove my risk to that, and also then look for the long from within here, right? So I can play both sides of the market. Just trying to play quite a bit of a tight range. So yeah, not the most ideal, not the highest probability in the world. Like if you wanted to be, a lot more conservative and just focus on that easy trade, you would ignore all of this session and you would set your alerts either on, this POI or ideally this POI, and you'd just be waiting for price to come into here and look for your, whatever your necessary confidence is. And you wouldn't even bother with this kind of tight, let's see, 20 pip range or so. But for me, there's enough, 20 pips, 2 pip stop. There's enough R from within there typically for me to play kind of, the extremes of this movement and try and stay out the very, very middle as best as possible. But yeah, I don't want to kind of keep ranting on about this. I'm just trying to make my thought process as clear as possible. But this is literally the main trade I was looking for, to then take basically full volume off at this high and then see if we can get us for some shorts from within here. Because although there is the potential that the M15 could switch bullish on the swing structure, because we are coming off that strong 4-hour swing low, right? Remember, if we take a look at the 4-hour chart, we have to bear in mind that this could be the move that leads to that break. But until we kind of get the break of that 4-hour internal high, right? So we can get the internal structure aligned with the 4-hour structure, which would be what? That would be the bullish M15 swing trend changing. That's when I'll start to kind of, have a bit more conviction that we're going to get that movement. But until then, shorts are kind of the main priority from these levels. Okay, so I'm kind of hoping I've made my thought process on how I viewed the M15 chart today as clear as possible. So coming into London, just kind of zoom into where the session started. Price was around here. So this is sort of Frankfurt Open. So at this point, like I was saying, I'm aware we're within this M15 level of supply. But again, if I show you on the M15, just so we can quickly get our bearings again, this is where the session opened. Right, so I'm looking for basically viewing this. Okay, let's do colors because that can help. So let's say that this is the larger structure, and I was looking for this movement into that movement. Right, now if we change the color of this, we can get it to work. Let's say green, and then we have the smaller structure within that. Right, so coming into Frankfurt, I was basically looking for one more little green leg down into at least break this low into this level. So I was looking for this movement, then into catching that movement. But with the potential that this short could have led to a bearish IBOS, right? And then the orange, get this to work, orange structure, right? Then would have been that movement, and then we can look for those shorts there. Okay, so that's essentially I was looking for a quick move that had the potential to turn into a bigger move, but really my main focus was on this movement here. Okay, cool. Back to the M1. So yeah, like I said, coming into, let's do a little bit of bar replay, maybe that will help as well. So this is basically what was happening. We came into this level, potentially could have taken a risk entry, not really something I do that often really, and I kind of want to focus on, there's kind of pro trend moves where everything's aligned, and obviously I was expecting this weak high to go, so it wasn't really something that was on top of my radar, but happy to play if I can get confirmation entry within here to target these lows, ideally into the long from down here. So we have a liquidation into the refined M1 zone within M15 at this point. Where is the chalk line? Because remember, no matter what, I need to see the change of character to align the fractal structure for my entry. So in more simple terms, if I'm looking for a confirmation entry, I cannot get involved until I at least see a chalk on the time frame I'm entering on. So at this point, I want to see at least price wick that red line. So we come down, come into our level of demand, right? And then we push, oh no, we don't, sorry. So I was trying to say then we get the change of character, but there was a reaction initially into demand because we came in, we pushed up on that one candle, and then we came down, right? So it's a little bit easier to see when the live price action is happening, but that's essentially what happened, right? So we've had the reaction to demand, failed to put in a higher high, and then we pushed to the downside. So now we've had our liquidation, mitigation, we've had our change of character because price is now taking out the fractal low, and we have also now had a flip. So you have two options of where you can enter from. You can either enter from this flip candle here, or from this extreme. Well, let's use the tool as well. From this extreme, and this is where it gets a bit tricky, right? Because what the most ideal and the most hyperable entry models I personally have is when price would come down, it would say react from the flip. That reaction would mitigate the extreme, but it would fail to put in a higher high and then push down. Because now what that means is there's only one POI to enter from because this extreme has been mitigated. So now the only POI you have to enter from is the flip. So yeah, then I have a high probable conviction of entering short from here. They're my sort of favorite trades. But when there's two potential POIs, it's a bit tricky, right? So what's the rule that we recommend a lot of you use? The rule is if you have two POIs, take the flip that sweeps liquidity. If it doesn't sweep liquidity, then set your entry order on the extreme, right? Because in theory, the extreme should always be the highest probable area to get involved from. Because if you're wrong, then you're wrong. Price goes up higher and you only take a minus 1 hour loss. Whereas if you get in here, price could take you out and it could also take you up from here, right? And then you have a minus 2 hour loss, etc., etc. You guys get that. So at this point, my thought process personally was, okay, I've got two POIs, the flip didn't sweep. Both of them led to a lot of momentum, right? Like there's imbalance within here. We have a lot of movement down to the downside. But also my main focus was on the long. I wasn't that bothered about taking the short really until kind of got the bearish IBOS in this instance. It's all quite corrective tight ranges at this point. So I wasn't really that bothered about trying to get into the trade. So I thought, you know what, I'll just set an entry on extreme because that's when risk to reward is going to be on my side. And if I'm wrong, I'm wrong. That's just a -1 hour loss. So in this instance, price pull back. Now this is where the way in which it was, how so corrective it was coming back in, you could have potentially set your entry order in, super corrective, came into the EQ, swept these highs here, right? And then went to the downside. So I'm just thinking out loud here, maybe this is where it can get a little bit unnecessary maybe, but I was just thinking, okay, the flip doesn't sweep liquidity, but we need some liquidity to be built. So here we get some equal highs and then it gets swept, but at that point it's already mitigated the level anyway. So if you had a 2-pip stop, you probably would have been tagged in. But yeah, so overall, very, very nice entry model. If only the flip kind of had a swept liquidity, but it is what it is. It was only a quick trade anyway, and you want to be taking pretty much you want to be taking partials there to at least remove your risk, or obviously moving to break even, because like I said, the larger internal structure is bullish, and once we come into this level, we would expect that level to hold to get that next M15 high there to the upside. So yeah, cancel my order that I had on the extreme, missed the flip, but it is what it is. So we come into this level, happy to look to get from longs from here, but what do I need? I need a chock, and at this point, that would be the fractal high that needs to go. So obviously, yeah, I'm just not interested in price action at this point. Definitely don't want to short, because now you'd be shorting against an M15 demand mitigation from the M15 low. So remember, at this point now, we're expecting that next bullish internal leg to go from here. So shorts are definitely off the cards for me personally at this point. Even though shorts are pro M15 swing trend, it just wouldn't be high probability enough for me to want to short from these, because I essentially view this I'm not going to keep drawing it, you guys know what I'm looking at. So at this point, yeah, there's nothing here for me, no chalk, just sitting on my hands until I see something that meets my plan. So now we come into the refined M1 level, essentially that wick of this M15 zone. And yes, technically this could be a swing entry, a risk entry that you could take, but I was happy to look for the confirmation entry from this level, particularly, like I said, it's still, in terms of the high time frames, low probability, because we are trading against the M15 swing trend and against the 4-hour supply mitigation in the M15 premium. So, the chalk line is obviously now down here. Once we take out this low, where is the nearest candle after this low was broken that failed to break the prior candle's low? This is the candle, right? Because that's your down move, that's your up movement, and then all of those candles break the prior candle's low. So that's your fractal high, okay? So that's where the chalk level is. So now kind of have two options again where you can enter from. So this didn't react from the extreme pivot, but for me, this is a close enough range to be more than happy to see that as the flip. So take it from the high of the reaction to the base of the reaction. But you do also have an unmitigated extreme if you look at the inside bar. So again, this is where I'm like, this is where I don't have the highest conviction, because like I said, when I have the highest conviction, it's when price comes into the flip, it reacts, it mitigates the extreme, and then pushes up, because now you only have one POI to enter from. So they're my favorite if it does that. However, and this is frustrating, especially, if you guys viewing this as members, as students, right? I would love to be able to give you guys just the simplest, most black and white answer every single time. And we do strive to try and make it as mechanical as possible. That's what I'm trying to do for my own trading. I wish I had the exact specific answer of what to do in these situations in which the flip doesn't sweep and you have an unmitigated extreme. But as of right now, I just don't. And that's why I personally, as you guys know, have that as open to discretion in my plan. Whether or not to take a flip that doesn't sweep liquidity or not. And I use discretion. This is just where experience comes into it. When you've seen hundreds and hundreds of these examples play out, and out, sometimes you just have a gut feel for when you want to take it and when you don't. Now, in this instance, I had a much higher conviction to set an entry order in here rather than here. I didn't think price was going to make it back to here. This is where the momentum came in. And also, I kind of view this when you have an inside bar, basically, especially when it's very close to the prior candle and that last sell before the buy, essentially viewing that as your M2 candle. Prices come in, it mitigated the top of that range. So essentially, if you view it as a range, it's probably an easier way to explain it. And that's just kind of giving me another little tick in the box that, I quite like this zone, and set my entry order on there. So again, appreciate it. For, you guys who want that super, super black and white answer. I haven't quite figured out the answer to this just yet. I want to remove as much discretion from my plan But in this case, yeah, that's why we have that rule for when you're starting out, is to only take flips if they sweep. So if you have that in your plan, that you need that, then yeah, this would not be a missed trade for you, right? If you viewed that as a mitigated extreme. But yeah, there's not really too much else I can say. Maybe we take a look at, say, like the 30-second, right? You can kind of see, this is just why I kind of view it as, see how it came up and then it mitigated that level, boom, and that's when the momentum came in. And that's kind of, yeah, what I can visually see on the M1. I wasn't looking at the seconds, and I was just happy to take it in this instance with the idea that we can target the weak internal high, right? So got tagged in, price pushed up. Now at this point, I spoke briefly about this in the last Q&A meetup we had, but I'm trialing or testing out not doing partials at 4R to remove risk anymore, but essentially looking to just trail to break even, and just try and ride sort of the majority of my profit to target. So there's a couple of things here that I'm experimenting with. I don't want to dive too deep into this video just yet, but they're the two kind of things I'm looking at is well, with my management, is one, trying to trailing my stop loss to break even, but I haven't quite figured out my exact mechanical rule for that just yet. And then also just basically doing set and forget to a fixed R target. But again, I don't want to get into that just now because there's a lot more thoughts that I have behind that, and I haven't figured out the answers to it all just yet. But yeah, just so you know, if you're wondering why I got stopped out at break even, because that's when price came back down. Here at this point, it just tagged me out. Was it this point or was it a bit further on? Yeah, I think it was there. So my entry, I can't remember exactly what it was. I've put it in the markup in the Discord. I think it was a little bit lower, so I didn't quite get tagged out on TradingView, but obviously spreads and that with the broker, it just tapped me out, which was a bit frustrating, but it would have been a break even anyway, because obviously, as you can see here, price came off that prior M1 extreme and came back down. So if anyone was shorting from here, I don't want to say that's invalid, because whether something's valid or invalid in terms of an entry will obviously depend on what your plan says. For me personally, I wouldn't have wanted to short from here because, like I was saying, we've come up, we've come down and mitigated the strong internal low, and I would be viewing that as that next leg to the upside. However, remember the green structure, the smaller green structures on the M15, where we basically have this movement here. So that, right, because that breaks that low, and then we come up, and then that breaks that low. So yes, technically this was a strong green, let's say, internal high of what we're drawing earlier. So there is still logic behind this, with the anticipation that could turn into the bearish move. So it's not to say that that's wrong, it's just that's the reason why I personally wasn't looking to trade from here, because I was more focused on the larger internal structure, and I was anticipating that movement, right? And I viewed that as the extreme mitigation, and now we're ready to go. So that's why I wouldn't have been wanting to short from here at this stage. But there definitely is some logic behind it, just not enough for me personally. So at this point, I stopped up for break even. We were failing to break these highs. I was just happy to now sit on my hands and let it play out, really see if it can go up there, and then look for the short either later in the session or into New York or the next day, depending on when that may set up. So then the low got taken out. And again, there's nothing going on here for me on terms of the M15, because if we look here, we've pushed lower into the M15 zone, so obviously there still could be orders from within this zone, but the prior move I tried to trade, we already mitigated well below the EQ, so I viewed that zone as pretty much done. And at this point, it looks like we were, what I just tried to draw with the green structure. If I can get the pen to work, we had this, right, come down, we come up and mitigate that level, and it looks like we were maybe going to sell off. So at that point, I'd wait for that to happen, wait for that confirmation, look for the pullback into here next session, and then look for that movement there, right? So I didn't have a high conviction that this was still going to go, that there were enough orders left within here, and obviously I don't want to short for the reasons I just explained. Not really that interested in shorting from the weak internal high. So at this point, I barely wasn't even looking at price. I set my alerts on here and down here, and I was basically done for these sessions at that point. As we can see, we just play it forward. It ends up shooting to the upside and has brought us to where we are now. So now we have had, let's just draw this up, do some quick analysis for you guys. Tidy it all up now. So that would be, we'll wait for the pullback, but this would be your boss, M15, iBoss. Just going to get rid of the text, because I try and keep it as minimal as possible to try and keep it clean. So yeah, let's say this is coming into New York now. What do we have? It's put on a pretty little navy dot. So internal structure is obviously still bullish. So until we get a break of, again, let me clean this up a little bit more. Until we get a break of the internal low to switch it bearish. It's only once that happens that we can confirm that the swing pullback is over, right? Then we get them aligned, and then hopefully we can get a pullback into the level there, and we can just keep following these ranges until we take out the swing low. Of course, you don't have to wait for that to take a short, especially as we're coming up into these nice extreme levels. This POI here, no inducement in the leg, didn't sweep liquidity, so could become inducement for this extreme zone, which did sweep liquidity. And obviously, if you're looking at the larger internal structures, right, that led to a nice internal breaker structure there with one leg. So this would be a strong protected low of that leg of structure there. Sorry, a protected high, a strong high, right? Which adds confluence to getting short from this level. Nested within the 4-hour POI, this would definitely be my favorite POI of the day to want to look to get short from. But I'm more than happy to trade from here. I'd personally try to react to liquidity rather than anticipate it too much. But you can see how corrective that was with a ton of momentum. Change of character would be from here, but even at that, it looks pretty messy here on M15 with those big wicks. So potentially probably you could look for another long from within here. You just have to accept, we're mitigating more and more premium and high probability supply at the moment. So following the bullish order flow is still valid if that's within your plan, but you just have to accept that the higher we're getting, the lower probability playing that move is. But again, remember, we're coming off a 4-hour strong low. If you map 4-hour structure the same way as I has, so maybe that could be enough for you to want to keep targeting these highs with the anticipation that potentially the M15 could switch bullish. I can only lay out the framework for you and our expectations and our understanding and what in theory should be higher or lower probability, but it's down to you as the individual trader to figure out what your risk tolerance is and what you're happy to trade, how you want to trade, right? I can't tell you what you should or shouldn't do. So if you wanted to continue that bullish order flow, this would be the level in which to look to do that from. So look for shorts from within here. I don't know how that looks on the lower time frames just now. I'd imagine it looks pretty messy with that big wick. This would be my favorite POI for what I said. It's got inducement, swept liquidity. It's essentially a strong high of this larger internal leg. We do have this level from within here, but that could play out, but typically I just don't really like it when prices are kind of quite corrective there during Asia and it pushes down. This for me is kind of the nicer move, but yeah, it's still valid. I'd still be happy to look for shorts from there if everything set up. So yeah, that's pretty much it. Hopefully that makes sense and you guys kind of understood kind of the way I viewed it. But if I can make it super simple, it's literally just looking for this bullish order flow to continue, nice corrective pullback into this level, looking for that next leg to push up into here, and now happy to try and look for the shorts. But you can keep being aggressive and following this bullish order flow if we keep going up. So yeah, have a good New York session if you're trading it, and I'll see you next one. Cheers guys.